Hello, welcome to this episode of Rich Insights. I'm Don Rich, Head of Investments for Esoterica Capital Markets. Today's topic is on the U.S. dollar. That's right, we're going to the currency markets and try to get some indication of where the dollar is likely to go. Now, the dollar has been strengthening throughout most of this year. All right? During the turmoil, the dollar behaved as a defensive asset. In the early stages of the equity rally, the dollar was still rallying as well. But last week we saw some dollar weakness here for the first time. So again, are we at a turning point? That's sort of the question we're asking ourselves right now. Let's jump into the charts and take a look at some of this here. All right, so here we're looking at four of the emerging market currencies here. Right, I've chosen some emerging markets that are either facing some structural issues right now and or they're dealing with a high level of political risk. All right, so we have Brazil, South Africa, Mexico, and Turkey. All right, if you're not familiar with the currency signals, I just went through them country by country. All right, so the way these currencies are quoted, a increasing slope here, right? A rising slope on this chart means dollar strength. All right, so let's start here. Again, with the Brazilian real. You can see most of this year it's been weakening. In fact, it got to all-time weak levels, the weakest ever. This chart only goes back to 2008. You're going to have to take my word for it, but it was actually the weakest ever. Now, since then, it's increased a little bit, particularly on the back of the equity rally. South Africa, again, tremendous weakness, but it's come back a little bit when equities were rallying. The last couple of weeks of the equity rally, the South African rand also appreciated, much like Brazil. Mexican peso, pretty much the same story. Tremendous weakness early in the year. Now it's starting to strengthen a little bit. Turkey has a few more problems. It weakened substantially and is only just barely started to stop weakening. Right? It's hard to say that this is lira strength. This is just the Turkish lira has stopped depreciating at this point. All right, so again, throughout this year, we have seen not only dollar weakness, but record levels. Right? For a lot of those emerging market currencies I just showed you, we've seen the dollar appreciate to levels not experienced in the past. So that was emerging market. Let's take a look here at developed markets. All right, here we start with the most weekly returns. Okay, and the way this works is that positive numbers on this chart, and in fact on all the charts, positive numbers mean dollar weakness. All right, so in other words, the yen has strengthened. The yen has strengthened 2.1% against the dollar, and Swiss franc is appreciated. Everything else is depreciated, right? This is dollar strength. And the dollar strength has been most prevalent here in Norway. All right, so again, those that aren't familiar with the tickers, we have the Japanese yen, Swiss, the euro dollar, New Zealand dollar. This is sterling, right? The UK, the Canadian dollar, Australian dollar, Sweden, and Norway. So again, in the last week, we've seen dollar strength except for the most defensive currencies, that being the yen and Swiss. Now up here in the top, we have some dollar baskets, DXY and the Bloomberg version of DXY. Right? You can see, again, that dollar strength. Now, the same is true on the year, right? The dollar is still stronger on the year. But where are we at on a month-to-date basis? So last week, we had dollar strength. But earlier in the month, while the equity rally was still going, you can see we had dollar weakness. Right? The New Zealand dollar had appreciated, or has appreciated, 4% on the month. That includes the 1% give back from last week. Okay, so the New Zealand dollar and Australian dollar have appreciated quite a bit. The month before, for the month of May, again you see dollar weakness for the most part. Now, I told you at the beginning of the year, I expected this dollar strength, right, and it has materialized. But we saw from those first set of charts, not only has it materialized, but particularly with EM currencies, the dollar appreciated to levels we've never experienced before. And again, maybe that's all right, because Some of these emerging markets have some severe issues to work out. And of course, we had the worst economic pullback in history, the COVID virus. But we had tremendous dollar strength, right? And now we've given some of that back, right? Particularly in some of the emerging markets. Now, I expected the dollar strength to last throughout most of this year, right? Because I expect that we're going to have a second and a possible third wave of the coronavirus, right? Let's talk about that. Let me explain that. There's a possibility that we have a second wave, right? A second iteration of the coronavirus. There appears to be a non-trivial possibility that that happens. Now, of course, that would be bad news. So you would think that's going to generate some dollar strength if we get that. But that's not what I'm talking about. I'm talking about the second order effects from the first version of the coronavirus. Now, what do I mean by the second order effects? Well, widespread bankruptcies, for instance, particularly in small businesses. A number of the BBB rated investment companies being downgraded to junk status, right? Losing their investment grade status. This would be the second order effects of the slowdown that we got from the first coronavirus. So I expected dollar strength just from the effects of the first virus alone. Now, if we get a second virus, again, I would continue to expect dollar strength. But that dollar strength, frankly, came faster than I thought it was going to. And that left us at some really, really strong dollar levels against particularly these EM currencies. So, the question we have from here is I still like the dollar strength. I don't like it near as much as I did at the beginning of the year because the dollar has moved so much. But I still like this idea of dollar strength going forward on the prospects that we may get a second round of the coronavirus and the second order effects from the first virus. But eventually that is going to play out. Now, what am I talking about here? The U.S. acted very decisively in terms of slashing interest rates and stimulating the daylights out of the economy. The other countries are slower to respond, but it continues to happen, right? And so the effect of the U.S. stimulus and the dollar strength associated with that is going to melt over time as these other countries step up and provide more and more stimulus and so forth. So I thought it was going to take through the end of the year. I'm still thinking that way. But again, it's happened faster than I thought it would. So general perception is some slight dollar strength from here. Again, could be substantial if we got a second wave of the virus or we get some meaningful second order effects. Now, obviously, if equities would just continue to go up from here, I would expect dollar weakness. That would tell us that the coronavirus is nothing more than a speed bump and we're going to go back to sort of more normal conditions, more pre-virus-like conditions. But that's the way I see things right now in the currency markets, particularly as far as the dollar is concerned. So that's our message for today. I'm Don Rich, and you've just experienced a rich insight. I hope you've enjoyed it. May your beer be colder than the company you keep. We'll talk again soon. Thank you.